Well, both core CPI and PPI are a little warmer. So China has started this reflation journey. But to be sure, this reflation journey will be a slow and bumpy one. So far, the GDP deflated, basically CPI plus PPI, is still in negative territory. So despite Beijing has made some initial progress on policy and reflation, they have to do more. That's why I do believe after the December Central Economic Work Conference, we will see more reflationary and restructuring policy to lift the inflation indices back to a normal range.
Right, so what do you anticipate they're going to do then, Robin, if you believe that they're going to roll out more sort of measures to try to help some of that demand?
Yes, I think they have to do a combination of reflation and restructuring, because the reason China is on the verge of a debt deflation loop was 100% of its GDP. The debt level of housing and the local government is about 100% of China's economy. That part was facing a lot of deleveraging pressure. So they have to do restructuring for these two sectors. They have to deliver reflationary policy to support the economy. To be more specific, they have to deliver a higher budget deficit for next year, widening the central government deficit to support things like the urban village renovation, the green capex to reflate the economy. And on restructuring the debt, recently they made some initial progress by issuing so-called special financing bond for local government, 500 billion RMB. But that's not enough. They probably need to expand this central local debt swap program tenfold to something like 5 trillion RMB in next couple of years. So the combination of reflation and the restructuring could help them to avoid this debt deflation loop.
Robin, one of the headlines that caught a lot of attention this week with regards to what you're saying, there was a report suggesting that this money was actually going to be coming from the central government now, given that there is a lot of pressure on those local governments. Is this something that you expect to see in terms of a different approach to how they're actually going to fund the infrastructure spending now?
Yes, that would be a move in the right direction, given the local government is facing revenue shortfall amid a downturn in the housing market, in the land revenue. Central government is the only entity in China now has a lot of firepower to leverage up. Central government debt is only 20% of GDP. So if they widen the central government deficit to support this urban renovation program, to support this central local government debt swap, that would be making some real progress on reflating the economy. That's why the December Central Economic Work Conference will matter, because that's the meeting, that's the signpost to set the budget, the GDP target for next year.
Interesting. We've spoken about the kind of support the government can extend out in terms of improving consumption in the economy. But I want to just circle back, Robin, to get your thoughts in on producer prices, because, you know, a large part of the narrative right now was that China is exporting deflation. And to that extent, the world was getting some reprieve from lower producer prices in the region. Do you think that could be changing now? And we need to be a little more cognizant of rising prices at the factory gate in China?
Well, the PPI was also in deflation, but cyclically, we think it has bottomed. Its sequential growth has turned into positive territory over the last 2 months. And if you look at the inventory destocking among Chinese manufacturers, they have went through a very rapid destocking over the last 8 months. So inventory level is largely normalized. And of course, there has been a bit investment boom in manufacturing sector in the last 3 years due to the COVID exports boom. Now they probably need to absorb that part. So the utilization ratio for manufacturing capacity in China remains relatively low. They have to adjust for that. But I think it's safe to say PPI has bottomed. It will take some time. That's why the reflation will be bumpy and slow. But maybe by second half of next year, PPI will also go back to positive territory. And that could put China's nominal GDP growth back to something like 5%. Right now, China's nominal GDP growth underperformed given the deflationary risk. But we think given the gradual reflation efforts, by second half next year, we may see nominal GDP growth back on track.